Hey guys, how are you? Vladimir here from HomeTraderClub. In this video, let's talk about how to do proper swing trading. So recently I uploaded this video here where I was talking about how to do scalping. But we are not all scalpers, not everyone can dedicate their time to do scalping during the day. Most of us are busy. We have jobs, we have responsibilities, kids, families, careers, businesses, you name it. So it's very important to be able to match trading to our availability and do not do this mistake and force something that is not meant to be for us. For example, for busy traders, scalping is out of the equation. And for those who cannot hold positions, then swing trading is out of the equation. Make sense? In this video, I want to break down how to do proper swing trading with high probability and high success rate. Before that, I would like to remind you that I started a very special dedicated playlist about cTrader platform, which you can find here on the right top corner. The reason I am making these videos is because, as I mentioned in the first videos, I was introduced to cTrader not too long ago, and this is an absolute superior professional platform for traders. Professional traders and retail traders. There are tons of advantages of this system, and you know me, I am a MetaTrader man. I'm trading it for over a decade now. But cTrader is on a different level when it comes to trading execution. Very important. Here you can find the list of the main advantages of this platform, while for me personally it is no requotes, no virtual dealer, which means your trades go directly through the market. You don't have the frozen quotes, no stop loss hunting, and from my point of view, these are key features for traders. And because nowadays it's less common and popular, still exists, but in the past, brokers could do literally whatever they want, and you couldn't fight it. Nowadays it's much harder due to all the regulations, requirements and so on, but also the improvement of platforms, and that's where cTrader advantage and absolute different level than any other platforms comes in play. So let's go now to the charts and let's talk about the swing trading idea. So by definition, the idea behind swing trading is to profit from small to mid price movements, wave movements within bigger trends. The idea is you enter a trade and you carry it on from several days to several weeks. It's all within this category of swing trading. But the idea is you don't need to babysit your trades. You let your trades run and you are not as exposed to all the intraday fluctuations and the noise as you are when you do scalping or day trading. So swing trading can perfectly fit those who are busier, those who do not want to watch the chart too often, frequently, and make too many trades. They want to spot the opportunity and to be able to ride a given trend on a higher time frames, right? And to join on a smaller time frames, like 4-hour chart, for example, and to be able to give it a shot and to ride these waves within the bigger trends. The best time frames, from my point of view, for swing trading should be 4-hour with daily combination with some entries that could be executed even on the 1-hour chart. But the 4-hour and daily, from my point of view, are the key time frames. Defining their waves within the bigger scale, the bigger trends, will give you the edge to spot proper opportunities and to be able to ride trends. So first of all, let's break down how do we define trend, and then I'll show you how do we actually join that. So trend by definition, I will go blank screen for that. Trend by definition is a sequence of highs and lows that go in the same direction. Bullish trend is when you have sequence of higher highs, higher lows. After that, what you want to do is get the pullbacks and to look to join this trend. A downtrend would be a sequence of highs and lows that point to the downside, when the logic here is join the trend, retraces, and you look for the opportunities to join and to ride the trend. When we define levels to trade, the key levels, of course, would be the previously created lows. These lows in an uptrend are the dips where the buyers took the control and were able to push the price to the upside. So if the price retests them again, this is your best opportunity to look for that levels and to join ongoing trend. In a downtrend, it would be the opposite. So, we have sequence of lower highs, lower lows. So previously created highs are the levels where the sellers took control, and if the market will be retesting them again, you know that these spots are classical. Oops, sorry, wrong icon. Classical opportunities to look for opportunities and to join the bearish trend. So, for example, let's take a look on gold. The idea here is define currencies with clean trends, ideally on a higher time frames. Weekly, daily chart would give you beautiful trends. A sequence of highs and lows in the same direction. It cannot be and should not be simpler than that. Gold is obviously going in a bullish direction, and as soon as you can see, it was ranging here. After that, it broke out of the range by making the sequence of higher highs, higher lows. And as soon as that happens, you know that from now pullbacks, and we should be looking for the buys. So let's take a look on an example. Let's put this vertical line here just for example, and you will see what and why. So this is the weekly chart. Let's go to the daily chart, and what we can see here on a daily chart, this was our place, on a daily chart, we also have a bullish trend. So from sequence of highs and lows, we got the correction afterwards and then restarted a new trend, as you can see here, or new waves. So what we have to do in every ongoing trending conditions is basically, if this was our trend, we put the levels around the lows. When the lows come to be retested, that's where, I don't know if there will be opportunity, but that's where I know I would want to trade. Okay, so this is the first, and then of course we have another wave to the upside, higher highs, higher lows. So this low and this low are key lows on this trend. Once they would be retested, this is my place to start looking for further opportunities to join a possibly ongoing trend. And same with the ongoing trend again. Now we have these waves going on, right? Can clean these highs. So we have this low and this low and this low. If there will be retested, there will be great opportunities to look for the buys. So let's go back to this example. Okay, so we predefined the trend and we spotted that if we are buying, we spotted the opportunity by joining around the lows. I don't love to enter blindly on the level. I love to see price rejection. Price rejection is when you see bearish candles which make lower highs, lower lows, flipping, and we start to see higher highs, higher lows on the candles. And if you take a look on this chart here, let's zoom in a little bit, from series of lower highs, lower lows, here on this 4-hour chart, we suddenly make these higher highs, higher lows. So this is your first indication that something is happening. And now let's take a look on some indicators. What indicators would give you the best option to join the bottoms? I love MACD. You can use moving averages. They will not give you anything, any better read than clear price action reading and the definition of levels, but they will be very visual. So MACD, moving averages, RSI, even stochastic could be all fine to use, and Bollinger Band, because when you are in an uptrend and you bounce off a lower Bollinger Band, for example, it will give you the option to spot this opportunity. So if we go to the indicator, in cTrader platform, what you have to do on the indicators, the easiest way from my point of view, right button, and then you go to the indicators, and here you find the one that you want. So if you want the Bollinger Band, for example, with the default levels, add to chart, and voila, here we are, right? So once it bounces off the lower band and the low that we predefined before, joining the trend becomes a classical opportunity. So MACD, Bollinger Band is one of the indicators which we can use. Now let's talk about the MACD. This is another indicator which I personally love. What we can do in that case is, once you see the daily chart spotting the reversal, look what happens on the MACD by the bottom here. Look how it goes from lower lows on the bars, we start to create higher lows. Okay, once you figure that out right here, you see it ticks to the upside. And once you figure that out, what I love to do in that case is to go to the lower time frame. And on the lower time frame, here we are, what I love to do, and if you follow me for some time, you know how important it is to me, I love to see divergences. The reason I love to see divergences is I want to know that this retrace that we saw on a daily chart happening would be coming to the end, and the momentum would shift from bearish control to buyers. The way to do that is by spotting lower lows on the chart versus higher low on the MACD. Histogram, flipping from positive to negative, from negative to positive to higher positives, or moving averages. In that case, we don't have the moving averages, but we have obvious trend on a daily chart. We have the low that was retested and respected on the daily chart, and we have the MACD ticking on the daily chart. At that point, there is a bullish histogram, a divergence. And this place here, the MACD crosses to the upside. So, can I know at that point that it for sure will go up? Absolutely not. But at that point, the risk is small compared to the possibility to join a trend. And if you catch that trend, then the next highs on the climb would be your targets. And that's what will allow you to understand, do you have a good trend or not? So think about it this way. If you are risking, in that case we are talking about 4,400 pips, target is over 12,000. It's 1-to-3 risk reward ratio. Joining a trend from key level, key bounds, respecting the low and the demand level, and making the bullish signs. This is where the indicators come in play and to help. This is one of the simplest ways for swing trading. Will you be able to find tons of setups using that? Of course not. But here it's not the quantity, it's the quality. You can find, considering all the instruments, during the months you would find very likely between 5 to 10 trades and opportunities to ride. Not all of them will profit, but let's say you find only 5 trades a month. 2 of them will lose, 3 of them will lose, 2 of them only would win. With this risk reward, even with 1-to-2 risk reward, not even 1-to-3, with 1-to-2 risk reward. If you win 2 trades, you make 4%. If you risk, of course, 1% per trade, then risk reward 1-to-2, it makes 4 times the total risk. What happens here about the losses? You got 3 losses with 1%, that means 3% loss. So 1% is in your pocket, and that's only if you risk 1% and only 5 trades. What happens if you have better risk reward? Think about it. Like in this trade, 1 to 3 risk reward, and you got 2 winners that paid you 1 to 3. That's 6% versus 3% loss. And if you won 3 trades, the numbers increase dramatically. And that's the advantage of swing trading. Not the quantity, the quality of the setup with high probability to end up as a winner as you join trend and you trade from ongoing trend and bounce of a key level. So once again, I want to repeat the steps. 1, find clear trend, daily or weekly charts. That means sequence of highs and lows in the same direction. For bullish trend, higher highs, higher lows. For bearish trend, lower highs, lower lows. Then wait for, if you're in a bullish trend, wait for the lows to be retested and respected. Once that happens, you know that something is happening. Then look for indicators to indicate that the price reacts accordingly, and the indicators, which is the mathematics behind the price, supports your assumption that the trend is going to continue. Then, if it's Bollinger Band, look for the bounces of the Bollinger Bands. If it is the moving average of the MACD, like I was showing here, or the histogram of the MACD, what you will want to do is to see the histogram ticking or the moving average ticking in the trend direction. Go to one lower time frame, find a bullish divergence in the direction. If we buy, bullish divergence. If we sell, bearish divergence. In this example I was presenting for the buy, so what we wanted to see is the histogram divergence or moving average divergence, and that's it. You protect the most recent low, like I presented before, once again here, and you aim to the next key highs on the ongoing trend. Risk reward should be at least 1 to 2 when you go with swing trading, and let it work. That's it. Okay, wait patiently. It's not about quantity, it's about the quality of the trades. You would not be able to spot too many, but again, swing trading is not for those who want too many. That's as simple as that. That's it for this video. As always, I hope you find value in it. Feel free to ask any questions if you have about this strategy in the comments below this video. I presented one example here. If you will want more, let me know in the comments. And if you have better ways to do swing trading, what are these ways? Share with us in the comments. Thank you for watching. Please don't forget to hit the like button, and I invite you to subscribe with the subscribe button below this video if you are new to the channel. I want to invite you to our trading family, HomeTraderClub. Get your access to our full, comprehensive, detailed trading courses, real-time trading education, real-time trading opportunities, and so much more. Join us with the link below this video in the description. Thanks again for watching. Best to you and yours. I'll see you soon with more videos. Good trading. Bye for now.